And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it is Wednesday, hump day, and that means Danny Ratliff joining me this morning. So good bit of news last night. Well, actually, a lot of stuff going on today. Obviously, we have the Fed announcement this afternoon. What will they say about rate hikes, rate cuts, right? And, honestly, when we take a look at the statement they'll make this afternoon, they'll go back to their data. Hey, the data is still showing signs of, kind of inflationary pressures coming down. Employment is kind of unemployment's rising. So we're kind of getting to where we feel confident that we can cut rates. That's going to be kind of the conversation. No, do not. I don't expect a rate cut today. Is it possible? Sure. But likely they will not cut rates today. But the estimates right now is, of course, they'll cut in September. But that'll come out this afternoon. He will give his Fed presser at 2 o'clock this afternoon. So we'll get to hear, exactly what he has to say and how the markets will react. But again, dovish comments today could certainly lead to a nice reversal in the markets. We'll see. If he comes out hawkish, that may weigh on the markets later this afternoon, heading into the close. Now, this morning, futures are pointing rather nicely higher on the back of a couple of things. One, the government has now announced that the chip ban won't apply to companies that are friendly to the United States. So that's giving a boost to companies like ASML, as well as NVIDIA, AMD this morning also up. Of course, AMD also up this morning after a really good earnings report last night. Of course, we added our AMD position yesterday. So that stock's going to be up about 11% or so this morning. NVIDIA is going to be up nicely this morning as well, just in sympathy more than anything else, because AMD had a very strong growth rate. And of course, NVIDIA doesn't report earnings until next month, but that's kind of a good lead that if AMD is doing well, most likely NVIDIA is doing very well also. And that's leading to a very much improved optimism this morning on those stocks. Of course, those stocks have had a big correction over the course of the last month or so. And again, not surprising because we've had this concern about large caps versus small caps. We've had this big rotation. We've talked about it here on the show. But a lot of this is really driven on the back that there's this kind of narrative that just kind of creeped up recently. It's like, well, maybe there's not really a in demand for AI and they can't monetize it. And it's way too early to be making those kinds of assumptions. What has happened, though, of course, is that we've had a very nice correction in the NASDAQ, as well as these mega cap stocks, which will likely provide investors who are willing to step into the pool a very nice opportunity to add some exposure to their portfolio. But again, there's this big overriding concern about revenue growth, et cetera. Microsoft reported revenues yesterday, and I thought it was kind of interesting. Stocks will be down about 3% this morning because they beat on both revenue and earnings, and they only grew. Now, this is Microsoft, a mega cap company. They only grew data center revenue by 29%, just 29%. Wasn't as good as the 30% that was expected, so stock will be down a little bit this morning. But, if you're a company the size of Microsoft and you're growing revenue at your data centers by 29% annually, quarterly, just et cetera, that's not bad, right? But valuations needed to come down. These stocks had gotten very extended. And so we're starting to see kind of some of this corrective process occur. And again, nothing wrong with that. But again, these companies are growing earnings rather strongly, and this price declination that has occurred is likely going to provide a very good opportunity for investors to step in and buy the dip, so to speak. Again, you have to buy companies that are growing earnings, and these are the companies that are growing earnings the fastest right now versus what we're seeing in other areas of the markets. Okay, let's talk a little bit about the NASDAQ this morning, because we're going to see a nice bounce in the NASDAQ this morning because of the earnings announcement yesterday. Of course, this conversation about this chip ban as well going to lead to an increase in the NASDAQ this morning. So here's what you need to know before the bell. When you're taking a look at the NASDAQ, we've had a very, very nice correction in the NASDAQ. See, this is what we've talked about before on multiple occasions, that when you're trading markets, understand that markets can only go in one direction for so long. And when you get these big deviations from trend lines, as well as from moving averages, those have to correct, and they will correct from time to time. These moving averages and trend lines, etc., all act like gravity. So when things get too deviated from those moving averages, you're going to get a price correction. That doesn't mean, now of course, when you get these price corrections, as we talked about the other day, this is where we as individuals, as humans, we have to start providing a rationalization for the chaos, right? We cannot have just chaos. We've got to understand why we have chaos, right? That's just us as human beings. So when you have this correction, all of a sudden we start trying to assign reasons for this. Oh, well, maybe AI isn't going to be as productive as we thought it was. Maybe it's not going to monetize as well as we thought it was going to. Maybe they're not going to spend as much on CapEx as we thought they were. But this is just rationalization. We don't know these things in this period of time, right? We have not seen companies come out and say, oh yeah, we're cutting CapEx on this type of investment. And there is no evidence of that right now whatsoever. Companies are spending a lot of money to build out data centers. Tesla recently announced that that Elon Musk wants Tesla to invest $5 billion into XAI. XAI has built out one of the largest GPU 100 farms in the country. So there's a lot of CapEx being spent on these GPUs, etc., to build out these AI data centers. It's way too soon to be saying, oh my gosh, everybody just came to this realization that AI is not it. And we're not going to do this anymore. They said the same thing about the internet when it first came out. Oh, the internet thing, that's never going to work. So who's going to want to get online and talk to people? But that's the whole point. But technically, these things have to occur. And yes, we need a reason. We need this rationalization of the chaos, right? We need that so that we can explain why we go through these corrections from time to time. And these corrections are a thing that we just need to be aware of, because they do happen with quite regularly over time. Every time the NASDAQ has gotten this extended from the 200-day moving average, we've had a correction. Importantly, we're now back to a very, very oversold condition. We haven't been this oversold with the NASDAQ except near market bottoms. So again, if you're looking for an opportunity to have allocation towards mega cap stocks, large cap stocks in general, this has been giving you, this is one of those opportunities that you'll get from time to time to add exposure to those areas. Again, this is why we added to our AMD position yesterday. A couple of weeks ago, before this correction actually took hold, we actually had reduced a lot of our exposure. We sold down on our Google position, Amazon, etc. We reduced all those positions. So now we're looking for this opportunity here to add back into those positions. And this is when we talk about risk management all the time. Here on the show, we talk about taking profits. Hey, markets are very extended here. Take profits. How many times have you heard me say this over time? Take profits here. Well, the part of taking the profits is to raise cash so that we can buy back things at a cheaper level later. And so we're now getting that opportunity. Are we there yet specifically? Maybe not, right? We may have some more of this work to go. Right now we're sitting on a major moving average support. We'll see if this holds. I'd like to see this sell signal turn into a buy signal. That'll give us a much better indication that we can more aggressively add exposure. But the thing here is not to let media headlines deter you from making investments in areas that have been the strongest trend growth over time, and that's been large caps, because simply those are the companies generating earnings versus small and mid caps. That's what you need to know before the bell this morning. We'll come back, pick up with Danny Ratliff. Got a lot of stuff to get into this morning. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome to the show this morning. Danny Radcliffe joining me as well. A few things to get into this morning. But again, as I was talking about just a second ago, the Fed announcement this afternoon, that's going to be the big driver for the markets today. Markets are looking positive out of the gate this morning. But again, this afternoon, the markets will be doing great this morning. And this afternoon, they could all tank if the Fed comes out and is much more hawkish than expectations are. But again, that's not really expected. The overall expectation, and this is why there's risk to the markets this afternoon, because the expectations are very high that the Federal Reserve will really kind of be more dovish in their tone and really kind of set the stage for a rate cut in September. If they don't, that could disappoint the market, right? And then again, they have the employment report already, which we'll find out on Friday. Is that unemployment report much weaker than expected or much stronger than expected? Because that may help weigh on their decision. So again, how this market starts out this morning and how it ends today could be two very different things. But the important thing is that technically we're sitting right on the 50-day moving average. We cracked back below it just a smidge yesterday. We've been flirting with disaster over the last day or two, up above the 50-day, below the 50-day. But this morning we'll be back above it again. So we've been just kind of sitting on support right now. Again, nothing really to be overly concerned about with the market. There's no evidence of a bigger deterioration or a bigger correctional process in place. I know a lot of you in our chat right now are just egging on a big correction. I don't know why you want pain, but there's no evidence of that right now. We'll see kind of what happens next. Kind of fascinates me though that people want to have such a bad correction.
Well, I think that, it's a difficult environment that we are in. You and John talked about this yesterday on people who are in cash. How do you start to step into the market? I think people would maybe feel better with the correction. But the problem is that those people who want that correction, they've been in cash for a reason. Now, did all of them sell high and they're just waiting to buy low again?
Yeah.
Or will they actually have the kind of the intestinal fortitude to actually buy when we get that dip? And I think the other question will be, I had a conversation with somebody a week or so ago when the market was still pretty volatile to the downside. And they said, I don't understand why we just didn't sell everything at the very top and then buy again at the bottom. I said, great. You know when that is?
Yeah.
And she said, well, I guess not. I said, well, I don't know anybody that does, right? And so that's the issue with that is that, you may be able to time one of those well, but actually going back in is the more difficult aspect of it. And, it's trying to catch a falling knife. At what point can you say, okay, regardless of what happens here, I'm going to go in and purchase, and I think it'll still be at a good price in a month, 2 months, a year. What we really need to think is start to, probably even lengthen that out a bit more from there. And that is the problem that I think most people are challenged with, especially in this environment right now. I mean, you think about the geopolitical environment that we're dealing with right now. I'm getting a lot of questions and concerns about, are we going into World War III? What are the other aspects? What is the impact to the market if that does happen, right? What happens if, election? I mean, obviously that seems to be at the forefront of everybody's mind, and rightfully so. But, we're talking about a lot of things that will shape the market over time. I tell most people, I said, listen, Lance, in general, you talk about the exogenous event. What is the black swan? I think that's more of what keeps us up at night, trying to figure out where that next bigger crack may be versus, the small things. Now, we have to take in consideration all of those things, big picture, but we also don't want to make knee-jerk reactions, which is why, historically, you try to smooth the data out. Don't make those day-to-day moves very quick because, as you mentioned just a bit ago, market may be up, handedly this morning, and then we could see rhetoric from the Fed. Jerome Powell comes out, and that could change it very quickly. And it also goes in the opposite. And so when we're very oversold, we're likely to get the bounce. When we're very overdone, overbought, we're likely going to get some type of correction at some point. So playing that game and being so nimble with it, I think small changes are probably better than huge, big changes where you get all the way in or get all the way out. And that seems to be the majority of people's struggles.
Yeah, and again, there's it's always interesting to me though that there's so many YouTube channels and media sites that are just article after article or video after video about this major crash is coming, and just sit around because pain's coming. I'm like, unless you're selling gold, right, which is the vast majority of these people, right? They're trying to sell a product. But why would you wish that on anybody? Because yes, the market's going to go down in value, but the devastation economically to your family, to your job, to your friends, to your neighbors, why would you want that, right? Why would you wish for that to occur? Unless you're trying to sell a product. And this is the important thing to remember is that, and I wrote about this yesterday, we talked about, statistically the market goes up 73% of the time, and that, drawdowns of greater than 10% only occur 13% of the time. It's a very low probability event that you're going to have a major drawdown of more than 10% in a given year. Can it occur? Sure. And it has happened before. We had the .com crash, we had the financial crisis, but why you wish for these things is a bit beyond me, because the consequences to the economy are much more dire than just a loss of market value.
Well, but when you get to that point, you're really probably not going to want to invest because, like you mentioned, you're going to have people who are out of work, your neighbor, your loved one, maybe yourself. And at that point, we're going to be in flight or fight mode. Most people are not ready to fight. They're ready to fly. And that becomes an even bigger issue when we're talking about, where do we sell at the top of the market? How do we get in at the bottom? And, fortunately, markets go up more than they go down. However, that destruction of capital, especially if we're in distribution years, that becomes much more costly over time. And so this is where I think it's extremely important to understand your discipline, what we're doing. And you mentioned, I get a lot of emails or calls and say, hey, what do you know about so-and-so? Well, I don't know. I've never heard of this guy. Or, let me see. And almost 9 times out of 10, I had an email this last week from a client worked with for a long time, says, Danny, this did you see my email? I said, no, tell me about it. And I literally just walked out of a meeting. He called and I said, he said, they're saying I need to take everything out of banks and I need to move it to another type of asset or do something with it. I said, I haven't seen the email, but I would almost guarantee you this person's telling you to put funds in gold or maybe crypto or something of that nature. And he said, wow, okay. And so, of course, I pull it up. So give me a second. Pull the email up, and that is exactly what they were doing. So you've got to remember, many of these people out there are talking their books. And they're very intelligent. They do a very good job of explaining things. However, there's one purpose intended, and that is to drive that business towards you putting funds with them in whatever manner they're doing it. And a lot of times it is that fear trade. So in times of volatility, I'm sure all of you in the chat chime in if you've seen this. But in times of volatility, we see a lot more of that because fear sells. We're thinking, oh, shoot, markets are down 5, maybe they're down 10. What do we do? Especially if we've seen a market that's been cooperating a bit. So at that point, I think that's where people are more prone and probably make more emotional decisions, and maybe not the best ones at times. But we always need to take that type of information with a grain of salt and take a step back. Okay, where's this information coming from? What are they trying to do? Had somebody else say, what do you know about so-and-so? And, I looked the guy up, and everything that this guy had, I think it was even in his Twitter handle, it was gold. So that is where we just need to be cautious as far as making those bigger decisions, because that can be costly over time, right? Especially when you start thinking about moving all of your funds. And listen, I'm not against gold. We've owned gold. We've owned gold miners, but we don't want to go put everything in one place like that. We want to be able to invest in different types of asset classes, invest in different sectors. We don't want to put everything in one place. And then even something that's maybe not it's easily accessible. Another great example of that, we have a client who has funds in gold, stores them actually in a vault, right? There's companies that'll take physical gold, they'll purchase it for you, and they'll store it. And, we started talking about it. I said, well, then this has been an emergency fund, so to speak, right? Don't want to necessarily use it in the plan, but this is the backup. If everything goes down,
it ain't going to matter.
Where do we go, right? But so we've been talking about this for several years now, but our last conversation was, we had a hurricane here. We couldn't get gas. Mm-hmm. I said, yep, that's right. What if we have a bigger electricity problem?
Power grid goes down for a month. Yeah.
Well, this gold's stored out of state. How do you get it?
And what good would it do you anyway?
Well, but how do you get it from there to here safely, number one? How do you chip away at those gold bars?
Well, and the thing is what are you going to do with it? See, this is the major thesis problem with gold, which is that nobody really thinks about the end game of all this. Mm-hmm. And, if you lose power, so let's just say, for instance, let's go to the worst case scenario, because we hear about this all the time. Somebody drops an EMP in the United States, right? Knocks out the power grid. Most Americans, about 85% of most Americans won't live more than a week. Outside of that is 2 weeks, because they don't know how to survive without power, water, sewers, all this. They don't have the basic survival skills. Danny hunts all the time, right? I can throw Danny in the middle of a wasteland and he'll figure out how to survive. He'll come out of there with, all kinds of clothing and he'll build a cart and all kinds of stuff, right? Because he's good at that. So he'll survive. Most Americans won't. But the biggest problem is that in that type of event, everybody assumes we're just going to magically go back to some barter system where we're going to use gold as a method of barter, and that's how it's going to protect your value of your wealth. It's not. You better have lead, and you better be good and adept at using it, because gold's not going to do you a whole lot of good if somebody just takes it all away from you, which they will.
Yep, amen. So, that's true.
By the way, I like that new deer skin coat you built the other day. It's pretty sharp.
Oh, yeah. Thank you. I'll wear it next week.
Hand sewn. All right, be right back after the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
In the last 2 years, there's been a massive drop-off. Like, nobody's naming their kid Alexa anymore. But yeah, because you go, Alexa, stop that, and all your lights go off.
The Real Investment Show podcast.
And I'm sure the kids at school were getting teased. Hey, Alexa, ask a question.
Same show, your schedule.
I hadn't heard of any kids being named Siri.
Not yet. I'm sure there are. I am sure there are. And there's probably some kid named Bixby somewhere.
At realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. So, despite the fact that we're talking about, and again, if you're in our chat right now, you probably have money invested, so you're not the atypical American. And, we talk about this quite a lot. And of course, if you've got a financial advisor that you're working with, you're not an atypical American because you most likely have more than a couple $100,000 at least invested. That's kind of the average account balance size. So you're not the atypical American. Again, we just take a look at, when we, and again, this is kind of a bit of the illusion of wealth in America is that, and I'm actually writing an article about this right now, but we have this illusion that America is this very, very wealthy country. In a lot of ways we are. If you make $30,000 a year, in America, you're considered to be below average, right? But you're in the top 1% of income earners worldwide. So again, just the amount of prosperity on a relative basis is quite phenomenal in the U.S. But if you live in the U.S., it's a very bifurcated wealth structure. And this has been because of just the fact that a lot of people haven't invested. They haven't saved money. They live beyond their means. They do all, we want to blame the system for it, right? Because it's never our fault, right? This is the whole problem with a lot of Americans in general, which is none of this is my fault. It's not my fault I'm in this situation. It's not my fault that I work for minimum wage, or it's not my fault that this is occurring. But if we actually get down to the root cause of it, it is mostly your fault, right? Because you didn't save, you didn't invest, you didn't get an education, you didn't, develop a skill set, whatever it was. Most of this stuff can be traced back to the mistakes that we make as individuals. And investing and saving is something that we don't teach a whole lot of, right? We don't teach kids in high school and even in college the basics of financial planning, right? At all. How to save, how to invest, how to balance a checkbook. Just the very basics of things we don't teach. And so they get out in the world, they make all the standard mistakes. They get too much credit card debt, they buy expensive cars, they buy houses they can't afford, and all these type of things. And then they wonder why they have these financial difficulties. But again, those like you who are in our chat or listening to our show right now, if you're listening to a financial talk show at 6:36 in the morning, you've got money invested. You wouldn't listen to this type of show if you weren't interested in your money. So congratulations to you. Huge kudos that you're taking responsibility for your financial net worth. And look, whether you agree with Danny and I and how we do things, I don't care, right? Everybody does things differently. You can buy whatever you want. You can sell whatever you want. That's the beautiful thing about financial markets. There's opportunity everywhere. And what makes the opportunity is the fact that people don't agree with each other, right? There's a buyer and a seller for every transaction. So the fact you're here listening to all this is fantastic. Kudos to you for that. But if we actually look at the statistics, the actual financial situation for a lot of Americans is really pretty dire. In fact, Danny's got a recent study out this morning. 1/3 of Americans?
Yeah, so the Guardian Life Insurance Company of America did a survey. So they surveyed over 2,000 employee benefit decision makers and also 2,000 Americans 22 or older who work part or full-time for a company with at least 5 employees. And, the numbers, I don't know if they're shocking. They're kind of sad.
Yeah.
In a lot of ways, right? And so, as you mentioned, some people want the pain, but we know what comes with it. But we've had a market that's been, I think over the last 18 months, we can argue it's been pretty good in some ways. We can get into market breadth and the rest of it, but if you're buying an index or you're investing in a 401k, you've likely done okay. But the survey was, like I said, concerning. So only 1/3 of Americans surveyed self-reported good or excellent well-being. So 1/3, 33% of people feel good or excellent in their well-being. 36% rated their mental health as good or excellent. 37% said the same about their physical health. And a smaller 32% proportion said their financial health is good or excellent. So there's a problem. And you hit the nail on the head when you said, we don't teach this stuff. And unfortunately, I think that this goes back to communication from family. I think we're not very prone to share some of the things we wish we would have done differently. We only share and highlight our wins. Just like, you go to your mailbox and your neighbor tells you about the stock they're up 100% on, but they fail to tell you the remainder of their portfolio may be down. Mm-hmm. We only hear about the good stuff. So, the bigger concerns are 48% of respondents cited not having enough money to last their retirement and not having a guaranteed source of income. Now, obviously, this is from a life insurance company, so I knew they threw that guaranteed source of income, which can be great. We talked about this a little bit last week. Having some type of income that comes in to guarantee, a portion of your expenses, I think is really helpful, especially when we're beginning to look at a plan. We're determining how do you meet your expenses best and keep that longevity there. Now, half said they know how much money they will need in retirement. This goes back to the financial literacy. And this is a tough one because I would say if I meet somebody somewhere and they say, oh, you're a financial advisor. Hey, how much money do I need to live on? Well, I don't know. Everybody thinks there's some magic number. And for everybody, it's different. I've told people with tens of millions of dollars, hey, you cannot retire. There's just no way. You spend too much. I've told people with $500,000, you know what? You're okay. Your expenses, you live well beneath your means. You don't have any debt. Your travel expenses, your normal expenses, all these things that add up, they're well beneath what you have coming in with Social Security, or maybe they have a pension. I know that's a dying breed out there. But it varies for each and every person. And now we can sit back and say, okay, well, if you're going to say you need X amount, and here's what we could get out of it. You could even go buy fixed income with this and meet those needs. But shoot, that has been a pretty big moving target. I mean, I feel bad for people, looking after 2007 until recent, really we've only seen higher rates for the last 2.5 years. Mm-hmm. But think about those people who've saved And they don't have many options. They're between a rock and a hard place because you couldn't go out and buy a fixed income or bond or find something that was going to pay you a decent interest to really keep up with inflation and keep up with your expenses. So a lot of these do have moving targets with them. And I would assume that, right now, those same people could lock in at higher yields and potentially be a lot better off, assuming rates decline, like I think most people think they will. We'll find out a little bit here this afternoon, maybe timing on that. But, the other part said 49% that said they would face a financial hardship without their workplace benefits. So meaning 401k, maybe if you are that dying breed out there that does have a defined benefit plan, AKA a pension.
Healthcare.
Yep. Healthcare benefits. I mean, Lance, we visit with a lot of different people and a lot of people say, I want to retire at 60 or 62 or whatever it may be.
Me too.
Yeah. You're funny. Like I said, you're on the dad plan, die at desk. So the problem that many people face is healthcare. Healthcare benefits are so expensive prior to Medicare that it just doesn't make sense. And I'm not talking about people who are pinching pennies, people who they're doing a good job. They likely live well beneath their means, but they realize how expensive it's going to be for them and their spouse. And it's astronomical, the amount of money that you can spend on. They say, shoot, never mind. One of us is going to continue to work, which is usually what we see. But there's a lot of interconnected needs here. And so we talk a lot about, physical and mental well-being, especially people going into retirement. Rich mentions that every time he goes and eats a donut, he wants to put $1 in a piggy bank, right? Or $100. Well, because, you think about the things that you're doing today and what the overall impact is long-term for healthcare benefits and how they're all interconnected. We talk about the mental issues that many people face. And it's really, I'm not gonna say mental, it's probably more emotional in nature of going from an accumulator to a distributor. That is extremely difficult for many. So, doing trial runs, things that we can do to kind of improve that mental well-being. But how intertwined these numbers are is amazing. So 73% of respondents with high financial health also rated their emotional health as good or very good. 82% with low financial health also reported poor emotional health. And so, that just shows how intertwined they are. Now, I think many people are between that rock and a hard place. And as far as looking at, right now, what do we have? 350 million citizens here in America? Right? Is that give or take?
330, 340, yeah.
Yeah.
Yep.
So 100 million people, adults, take care of a child, a parent, or another relative. Okay. 25% of that 100 million, so 25 million, are doing both. Meaning taking care of children's and a loved one. So,
it's what we call the sandwich generation.
The sandwich generation. That's exactly right. And so, when we look at this and we think about, what happens here, we begin to neglect ourselves in taking care of that self-care. We're not doing it. Trust me, I get it. Shoot, I'm not even taking care of an older generation, but it's very easy with children to kind of neglect taking care of yourself and do things that, okay, hey, we're at work, we're taking kids here and there. It's busy. I get it, but you need to take care of yourself. So the survey found that 40% of respondents in this position also reported low mental and financial well-being, and 31% reported low physical health. So we've got to begin to start taking care of ourselves, right? Because at the end of the day, what is all of this worth? If you're going to work so hard, you're on the grind, but you die at your desk, you can't go out and actually enjoy it. You can't spend time with loved ones.
So you're saying I should retire?
No, everybody but you. Everybody but you. I mean, here's the problem. Lance's mental and emotional well-being would fall off a cliff if he did not have something to do. So I'm looking out for you here, okay?
Okay, yeah.
But I think these are all tied together. And so, my grandfather, when I was really young, said something. We were driving by the medical center here in Houston. Obviously, if you've never been here, it is humongous. It's like a miniature of Vegas. He said, listen, a lot of people in those hospitals that would give every dollar, a lot of millionaires, for your health right now.
Absolutely. And like Vegas, the health center takes all your money. Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, talking a little bit about this, this issue in America that, we have 1/3 of Americans that are basically, don't have financial well-being because of all the mistakes that we make. And again, some of those mistakes are, in fact, the vast majority of those mistakes are self-generated, right? They're things that we cause to happen to ourselves. And again, as we talked about before, everybody wants to blame somebody else, right? I'm going to blame the Fed. I'm going to blame this. I'm going to blame this other thing. I'm going to blame this politician for whatever, whatever's happening in my life. This is how we act as individuals. We don't want to accept responsibility for our actions, but learning to accept responsibility for your situation is the first step to start to change that situation. And it's always fascinating to me, Danny, because I get these emails from people every day. I get hundreds of emails a day. And people are like, well, here's my situation. I'm trying to invest, and what I got to do to get started investing. Well, it's very easy. You need to save money. So let's get out of debt and let's do these basic things. Create an emergency fund, and let's set aside a certain amount of savings every month to go into our 401k plan. All right. Well, I can't do that. Well, why can't you? Well, because I have all these other expenses. Well, okay, we need to look at your budget. Well, I don't really want to do that because, and see, this is the problem, is that we want somebody to solve our issues for us, but we don't want responsibility for those actions. And it's just a very difficult thing. I can't tell you, Danny, how many people I've met with in the past that when you sit down and start trying to talk to them about, well, you can't pay for your kids' college. Right? I mean, you think you have just committed a cardinal sin. Right? It's like, well, I have to. No, you don't. There's no law that says you have to pay for your kids' college, and you can't afford it. And if you do, you're going to put yourself into financial ruin, and then you're going to be living with your kids, as we talked about with the sandwich generation, in the future. So what would you prefer to do? Have them pay for college, or you pay for it and then live with them later? What would they appreciate more? But again, it's this idea that we are entitled to certain things, and and these are certain things that we should have, but that's not really how the system works. And we need to all start taking responsibility for our actions and our position. in our situation so that we can start increasing our ability to have a better future.
Well, I think that's so important. I mean, I visit with a ton of people and we look at these numbers and we say, okay, this just doesn't work. What are we, why do we think we have to do this? I mean, I visited with somebody the other day, a couple weeks ago, and they said, I have to have $75,000 for a wedding and I have to have X amount for the other one to finish college. And it's like, no, you don't have to do any of that. None of that is written in stone. So the problem we see is that many people will bankrupt their retirement for their children in many different ways. And so this goes back, though, I think that this has to start at the beginning. And you have to remember that if you're the adult in the situation, you are teaching the kids about money, what you do, how you spend, what are your habits. I have 3 children. I get asked for things all the time. And while we may be able to afford them, I'll say, hey, that wasn't in our plans. That's not in our budget. That's not what we're willing to spend money on right now. Well, what do you mean? You have the money. Why don't you spend it? And so it goes a step further on just the basics. That goes back to Personal Finance 101. But, I know you get these emails. I see them. And, I'm proud of you. You've actually had some financial planning conversations. It's kind of scary sometimes. Some of the things you write, I'm like, oh, well, that's pretty close, but I'm not real sure that's how I would state that. But I think that the important thing is it's the behaviors, because what we do see on a lot of those emails that Lance gets is there are also questions about very speculative investments because I have to make up for lost time because I have not done those things. And I get it. Life is difficult. I mean, we look at 401k numbers. The average balance, according to Vanguard for 2023 analysis, shows it was $112,000. The median balance is $27,000. And I came across another article that says, great year for 401ks, but it doesn't fix the problem of poor returns or poor participation. And poor participation, I think, is the bigger problem. We have to think about right now, and you have to think of yourself as a human capital machine. Right now, you're the one that's providing income. And fortunately, and we don't think about it in that way many times. We think about it as the market's going to be that machine. And while we want to use the market, we want to use that, as Lance will likely say, you want to use it for what? What's your goal with the market in general for most people?
Outpace inflation.
Correct. But many people look at that as to bridge that gap of that savings downfall. And we see a lot of times, too, is that it's somebody who's actually older that begins to think, I want to go and get a lot more aggressive now to make up for that lost time. And we always go back to that conversation. Okay, great. So what additional return would you achieve? Well, I don't know, 10%, 20%? Great. Is that life-changing? Well, I don't know. So let's go back and look at the numbers. But now, what if you lost that much on the downside? That can be life-changing if you're in distribution mode. We're right there. And so that is where we need to start thinking about us, especially the younger generations need to understand that, it's about creating those good habits, about the hierarchy of savings. I don't always want somebody just to go and start funding their 401k right away. Do you have that emergency fund? Do you have funds set aside for any of those major goals or objectives that you may have? And, are you going to purchase a home? Do you need a car? What does that look like? How do you do so and not put yourself in a bad situation? Those are conversations that I don't think are being had quite often enough. How do you use an HSA? Should you fund that? Do you get matches? Should you fund it and not use it? Do you have that ability? And start really determining where you put the funds all along the way to give you more flexibility in retirement. We're not in that game anymore where we can just say, we're going to put in the 401k, we're going to set it and forget it. We can't do that. We're in an environment where, what do we hit, $35 trillion in deficit? You think, what's the government going to make that's going to help with that? Nothing. You're the one that's going to make money. You're the one that's going to produce. So at the end of the day, we have to understand they're going to come for you and start to try to get those funds in some way, somehow. So we have to review all of these accounts as a partnership from a taxation perspective and understand that partner is Uncle Sam, and that how do you keep more money in your pocket long term? And I think that, so now we're getting deeper into that conversation from a perspective on where do you save? How do you save? How do you put yourself in a situation so you're not one of these respondents that says, I don't think I'm going to make it. A third. Feel good? That's not good.
Right.
So these are the little things and the habits that need to be created at a young age. And unfortunately, I just don't think we're not there yet. And the education system needs to do a better job. I'm not sure why we're not teaching having these conversations at a young age.
Well, they try to do this, and of course, every time I hear about one of these, I often get emails from people that are like, "Oh, my high school class is doing a stock competition this quarter or this semester. What stock should I buy?" And those don't teach you how to invest. That teach you how to gamble, right? Because the way to win those stock competitions is to buy penny stocks and
speculative,
and hope they go up because you have the biggest percentage gain. That's how they measure it. So that doesn't teach kids anything about investing. Doesn't teach anything about fundamentals or technicals or anything else. It's simply just trying to speculate as to what's going to give the highest return. That actually does way more harm than good and should be taken out of schools, right? Because it's not teaching anything about the investing process long term. And this is why we have a lot of kids that are coming up. They're gambling on Robinhood apps. They're buying the most speculative assets or chasing meme stocks because this is what they learned in high school, right? So, we don't do our children any good. I try to spend a lot of time with my kids. I don't sit them down, and we don't have classes on economics and this, but I do try to encourage them to pay attention to what's going on and give them responsibility. And this is why we make them pay for their own cars. We make them pay for their own insurance. They pay for their own college. These are things that if they want these things, they have to learn, they have to earn them. They have to work for them. They have to be responsible for them. And then they take ownership in those. They take pride in those because it's costing them something to do that. But we have to take these, skills and teach them these things. They don't come just innately, right? We have to be taught how to do these things. I didn't know these things growing up. I learned them the hard way. Everybody does. And so you can either make all your mistakes young, get over them and build wealth, or just keep making the same mistakes your whole life and be poor.
No, that's right. But that conversation, I think that, Lance, you can have that conversation with the kids.
Absolutely.
And I think that sitting them down is not a bad thing. I do it often with ours. There's actually some really good books out there as well that have discussions about it. Some of them I think may be over their head, but they have illustrations or children's books. You can find things that actually do help spark that conversation. And I'm shocked sometimes. I get questions like, so tell me about the Federal Reserve. Like from books, though, that are children books.
Yeah.
But, later on, they're like, tell me about this. Or my oldest, who's 11, was like, Dad, explain the economy to me. And I'm like, whoa, okay. That's fantastic. She wants to be a marine biologist. I'm like, no. And work with sharks. I'm like, come on.
Why? This sounds awesome.
It sounds awesome. I was like, you better marry rich. Because I don't think that pays real well. But the conversations need to be had.
That's my biggest conversation with my kids because I've got two in college, one in be a senior this year coming up, and they're trying to figure out their life careers. And so every time they come to me, it's like, Dad, what do you think about this job? Go Google Indeed, tell me what the average pay for it is, and tell me if you can live on it. And they come back and go, okay, I've changed my mind.
Well, but that's probably most of the jobs out there right now.
Yeah.
For the lifestyle that most people want.
I told my daughter, go Google plastic surgeon. Average median salary, $650,000 a year.
Wow.
Plastic surgery. And works for my wife as,
What are you talking about, Lance? She doesn't need anything.
Of course not. All right, wrap up the show for today. Thanks, Danny. Be back tomorrow, of course, with Michael Leibowitz. We'll talk about the Fed decision today and how the markets respond to all of it tomorrow. We'll see you in the morning.